Why is Wall Street up and we're down? What's going on with these private equity bullies at BHP and Fairfax and the bank levy? What's going on there? I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. All right, Paul, Wall Street is up, record high territory, but we're down. How come?
I think, Peter, the problem in our market is earnings just aren't good enough. I mean, the bank profit season last week, which finished with Westpac, I think that was pretty weak. It was a bit disappointing, flat earnings. The bank's not doing enough on costs to get serious. A couple of taxes to worry about. People are still worried about commodity prices, and Amazon is going to kill all our retailers, and so there's enough sort of negativity around it. It's really hard to find stocks that I think have great growth prospects at the moment, and that's why I think our market is just struggling to sort of match Wall Street.
And Wall Street's earnings have been better than expected, haven't they?
Wall Street's earnings have been better than expected. I think it's incredible. They're just sitting at this top level, and you get a fraction of a movement every day, and you wake up and find the Dow up 3 points or down 3 points.
Yeah, they don't want to sell off.
They don't want to sell off, but then we're not getting a catalyst at this stage to really buy it. And so I think it's hard for our market.
Yeah, I also think, Paul, there's still a belief that Trump will get some kind of tax policy across the line, and that's why they're not willing to sell off. If that tax policy gets really gazumped in the Congress, I think we will see the market sell off.
Yeah, I mean, I think people are still waiting to buy our market, but I just can't get excited. So,
Me too.
I think you just got to be really patient.
Okay. Let's talk about the private equity bullies out there. So TPG wants to take Fairfax. If you were a Fairfax shareholder, would you take $1?
I'd hang on. I think there'll be others. $1.20. I think the board will come out against. They're going to recommend against the takeover. Clearly, I doubt some of the shareholders will accept. So look, they'll be playing on TPG, either upping the bid or somebody else coming back.
Why wouldn't you sell and wait for the share price to fall when Fairfax says no, and then buy back in again at low prices?
Well, I think people have a lot of high valuation domain, and I always think someone's going to want to own those mastheads. They don't make any money, but there are enough, wealthy billionaires who want to exercise political influence, that they're going to be worth something. They don't have to make money to own, the Herald or the Sydney Morning Herald, or more importantly, the Australian Financial Review or the Age. I think they're worth something more than the market values them at as a revenue or profit or loss-making business. So
okay,
I reckon it's going to be worth more than $1.20.
Let's go to these horrible people called Elliott who are picking out the big Australian BHP, no longer Billiton, BHP.
What the hell is BHP wasting $10 million of shareholders' money on a brand?
Because they're real Aussies, and they're afraid of these American hedge funds. We know they dig up dirt, right? I mean, what a waste of money, right? Now, BHP needs a big shake-up. I think this is actually... I'm not anti-Elliott. I think BHP's long overdue for a big shake-up. Yeah. Jack Nass is still there. He's going soon, right? I mean, BHP is one of the great... In terms of companies that have destroyed shareholder wealth, BHP is almost up there in the number one territory. I'm a bit harsh on BHP, but look, I think... But would Elliott be good for current shareholders?
But I think it will cause BHP to reassess what it's doing in the US with its oil and shale business. Okay. Probably exit that. I think that's inevitable. And then it has to turn around and say, what does it do with the capital? Where does it next invest?
Well, maybe they should buy South 32.
Maybe they should go buy South 32 back. Look, the way BHP handled Elliott initially was typical BHP, dismissed it totally, just typical BHP arrogance. Now it's going to be forced to negotiate. He'll get something out of it. There's no doubt that BHP will take action, and I think that's probably healthy for BHP.
Okay, banks, Paul, you've got the levy, you've got all this Ken Henry, he's getting personal. What's going on?
Just get over it. I mean, the government can't back down on this. They're going to be supported by the other parties. Look, it's $1.5 billion, $1.6 billion. The banks will work out a way to charge it back to customers in due course. It might take 6 to 9 months to pass some of it on. There's still so much opportunity in each of the banks to look at their cost base. I just think, the UK experience shows that this thing can work. It's not going to change. So I think there are some precedents. I think broader industry groups should be worried about this because the two challenges. One is government's picking on an industry again, different tax rates for different industries. I don't think it's healthy. But more importantly, within an industry to say, okay, this group pays a tax and that group doesn't.
Woolworths and Coles, they're next, and Metcalfe gets a benefit.
Yeah, so there's some real worries there. So that's what I think business should be more worried about and working out how that doesn't happen again. But I think in this particular case, obviously it's got to be worked out the details, but let's take the argument out of it. It's not going to change.
But do you buy the banks at these levels? Do you wait for it to fall further and then buy?
Probably in the categories I wrote in the Switzer Super Report this week, I think they're pretty fully valued. I think you still index weights the way to play them. I don't think they're in bargain territory. I was disappointed with the half-year results, Peter. I thought there might be just a little more revenue growth. And if you actually look on the second half, the current half versus the first half, look at their consumer banks. Each of the three major banks went backwards in their sort of consumer Australian business.
Or do we buy Bank of Queensland and Bendigo because they've got competitive advantage now?
I still don't think there's enough discount in the regional banks. So I think, look, for the market to get through 6,000, the banks have to take it higher, right? There's no doubt it's too big a part of the index. So that's why if you're bullish on the market, you've got to stay long banks. However, I don't think it's quite right to be overweight them, and I don't think at sort of $82 Commonwealth Bank, they're super value.
So, they were valuable at $68.
They were value, and I think if you think the market might pull back at some stage, that's when you look at topping up.
Okay. Well, I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.